What is up, family? It's your big brain of the Bollinger Band. Hope you're doing absolutely sensational. I got a review for you today. Let's go and look at the broader markets along with some individual stocks that I've had many requests on, specifically on Twitter. By the way, thanks so much. Finally hit 10,000 followers on Twitter. It only took me 10 years of diligent effort and a tweet every single week, at least for 10 years. Anyway, you guys are the best. Long-term broader market, SPY. We are sideways, ladies and gentlemen. What should we do in sideways markets? Day trading is fantastic. Option selling is fantastic. Being neutral is wonderful. Buying as low as you can, selling as high as you can, and not waiting for huge moves, AKA not waiting for big trending moves. When you're sideways, in and out, quick, take gains, be slow, be methodical. Here on the SPY, we are literally smack dab in the middle of the 100, 200 on the weekly chart, on the daily chart, which have a very, very small range. And then, of course, on the weekly chart, we're in the middle of both of those as well. That's how I know we're sideways. And we're going to chop around in this environment for a while. There's tons of bearish news out there with banks, with monetary policy, with macroeconomics issues, and we're still sideways, which actually does show overall strength in equities, but I do expect to take advantage of great opportunities for bear call spreads, bull put spreads, put sales, call sales, iron condors. Take advantage of all that information. And just in case you need to revisit it, remember, it's entirely free. You're welcome to go to reallifetrading.com, click on more courses, and go into our advanced trading where I teach you all about options. Well, a lot about options for free. I mean, just throwing that out there. That being the case, let's go look at some individual stocks. First on the list is ONON. This is On Cloud. If you are a runner, you probably know about this particular shoe. I actually own a pair of the shoes. I don't really love it for running, but it looks pretty okay. This had an amazing gap. Really good sales came in. They reported 2 cents a share. They thought they were going to lose 8 cents a share. Fantastic gap, fantastic volume, and we've broken out of some really big moves. So that being said, this is one you should put on your watch list for a day trade or swing trade and allow it to dip, pull back into some moving averages and buy that dip because the trend looks to be continuing from here. This looks like a strong breakaway gap that might not fill entirely. And I'm extremely secure in buying this pullback, especially on a $20 stock. I like stocks that are in this range because you can buy a lot of them, right? Buy 3,000 or 4,000 shares on this dip, hold it, let it pop $3 or $4, sell, make 9 or 12 grand, call it a day, right? Buy a bunch of shoes, pay your mortgage, pay your credit card bills. Anyway, this is gonna be a really good one to keep your eyes on. I like it a lot. Had a request for Walmart. Ticker symbol WMT. And Walmart, speaking of sideways, trade down to the 200, had a perfect little doji down there. I like the doji. Here's the doji off the 200 simple. A little bit of a morning star reversal pattern right there. You got the completion of that star pattern with a close on this day. And based on the candlestick theory, you would have bought halfway into that candle, stop loss right there. Now your target on Walmart is the 100 simple, which is 143.89. So if you're in Walmart, well done. Also, you bounce off the 100 on a weekly chart. This is why using multi-time frame analysis is crucial in your trading. Being able to use both, piece them together, understand where you should get in and how you should play it is stupendous. Speaking of, let's go look at Coinbase. Coinbase Global had a big gap down because of an SEC investigation. And really, that's not a bad thing. That's just saying, hey, the SEC wants to look into Coinbase and wants to regulate cryptos more. Coinbase had a fantastic Twitter space discussion where they brought in Brian Armstrong and a bunch of officials to kind of discuss a little bit about the rules and regulations the SEC is trying to enforce without having any, rules and regulations. And as of right now, I think this is a really good opportunity to take advantage of not only implied volatility, but probably buy some dip. You'll notice 2 or 3 weeks ago, there was an amazing bear candle gapping up, closing above the 200, closing above the 100, and most importantly, closing above that 10 EMA. Then you had that inside candle, both with upper shadows. Your entry would have been very clean, very easy, 66.46 by 60.66, and that would have easily been a beautiful move for, some serious gainages, right? Buy low, sell high, the exact same spot that it sold off last time, and that's what happened again. So with this type of gap, I did sell some puts, and I did make that an official trade that I posted on our TradingView, so make sure you follow us on TradingView. But that put sale has slowly begun to evaporate quite substantially, and I actually don't mind buying some shares of Coinbase on here because, again, Coinbase will make money regardless of what crypto is doing. People are buying and selling the commissions. They're going to make money regardless, but a lot of their assets are in crypto. And if crypto moves higher, which it's slightly been doing so recently, Coinbase probably will as well. With the 100, 200 acting as a support, I kind of deem this as a channel. So I am waiting for it to go down a little bit more, but as it goes down, I will buy some more dips and probably sell some longer term dated puts. This one was a beautiful put sale. Fantastic opportunity. And if we get a bigger dip, I'll probably sell some 30s for late April or early May and look to get paid on that. But I'm watching Coinbase on a daily and weekly basis down here to buy dips and, let it fill this gap and make some money that way. Speaking of big gap down, Square had a pretty scathing report on Hindenburg again. This is a short firm that essentially takes a short position and writes a pretty scathing report about why they're short and why other people should be short, and it causes big gap downs. They make money, they buy to close, it's a newsletter. Anyway, be very cautious if Square, aka Cinder Block, closes below the candle today. This is huge volume. In fact, this is the biggest one-day volume in the history of the company. And then if you go to a weekly chart, this is the second biggest weekly volume in the history of the company. This is a very, very important price to keep an eye out on Block. So I did have some shares of Block, and I will be selling those shares at 75. I got into a long put with a close below this candle. This is what I was kind of analyzing at the time. Evening star reversal. We broke that evening star reversal. We had one last gasp of buying pressure with that lower shadow. And I figured, my thought was, if it broke below there, then sell those puts for a profit at the long-term averages, but it would probably make its way down there. Bought the 75 put and then sold the 75 put for a profit. Use the premium and the profit from the selling of that put to buy more shares at the 200 and 100 simple. Bought my shares, and then 3 up days in a row at the exact same price I bought the put before. Figured I'll do it again. Very frequently, 3 up days in a row, I will sell calls against my position and I will buy puts after that third up day. Got very, very lucky, and boom. So now I'll be selling my shares at 75 for a loss, so that we're all keeping track of this one. And then I'm going to begin to slowly re-pyramid back into Block, aka Square, down at these levels. So keep a very close eye on this one, because if it closes below here, it's going to get a little bit topsy-turvy, I feel like. And other than that, I'm expecting Square to slowly grind higher and most likely fill this gap over time. All right, some banks. Been getting a lot of questions about this one. Yes, I am in First Republic, and you'll notice I'm still only in 3 pyramids. Not even the 4th one has filled yet. But here's what's fantastic. I got a lot of hate on this video and this position, which is perfectly fine. I get it. Haters be my motivators. You hate us because you ain't us. It's all good. Don't worry about it. But here's the truth. When I got filled on this on Monday, I got filled at 1972, 1649, and 1262. Well, the next day, ladies and gentlemen, and again, this is why math reigns supreme when it comes to trading, I still didn't even get my 4th pyramid filled. I know my risk. The stock comes down to 1262 and it rallies very, very strong the very next day, which was Tuesday, by the way. So if you played this move, you had the opportunity on both of these positions to capture a profit. Even if you bought at 1971, which I did, 72, 1649 and 1262, if you sold some of those positions at 18 or 18 and some change, you made a 43% return on your investment. Math is supreme, ladies and gentlemen. It's all about knowing your risk. So I still came out ahead, took the profit, and guess what? Did again. So bought some at 1649 and 1262 again with my profit. And at this point, there's no way I'm going to be able to lose on this trade. But all good in the hood. At this stage, team, I am still extremely confident that First Republic Bank will do this again. Even if it just does that, again, based on math, taking my risk into account, knowing how low this could go, and there is definitely fear in the streets. People are panicking. Banking is at its scariest right now, which is a good time to purchase. Even if it just does this, we are looking at a pretty decent return on any shares bought into there. It's a 50% return, and I'm extremely confident it's going to pop back up to 18 in the next, 2, 3, 4 weeks. So as long as you know your risk and you know you're protected, math is math. So there's that on First Republic Bank. That's kind of my plan. Buy low, sell high. And then once you make some profits, reinvest those profits and hold longer to see if we can get good pops back up in 35 or 50 in the next, 3-4 months. For all my friends, individuals, and people that live in Nashville, I got 2 other banking stocks that you should be keeping a very close eye on. I have bank accounts at both of these locations. Pinnacle Financial Partners is all over Nashville, Tennessee, along with First Horizon. This is a big, big drop on banks, and Pinnacle is down 53% from its highs at 110. Now, this stock has been around for a very, very long time. And sure, I agree that it could get a little bit worse, but you remember, you never call the bottom on anything, ever. So you do need to be buying assets when they are depressed. I do not personally believe that banking is just going to disappear and that whole sector is just going to get wiped off from the face of the earth. I think that's a very, very moronic statement to feel or even state. So that being said, I will be buying some Pinnacle from 55 all the way down to 45. I'll be buying larger positions in here for a longer term position. Buy more as it goes lower. This is not adding to a losing trade. This is the trade. My trade and my risk is already defined. I know exactly how much I'm going to lose based on getting in at 4 different levels, based on my pricing, knowing where my stop loss will be, knowing where I'm going to be buying puts. This is a very, very smart way, in my opinion, to buy depreciable assets. And you can see the last time Pinnacle had a dip of this magnitude at about 53, 56%, we started rallying after we made that new low that looked like a double top, AKA COVID. Well, here you go. History might repeat itself on Pinnacle. And not only that, but First Horizon, which is all over the place. Now this one, a little more, not as growthy as you can see that Pinnacle was. So this one's definitely getting chopped around a lot more. And it had some really, really interesting news recently, but it's having some wild, wild swings. So if you like volatility in the banking sector and you want to bank or put money into a bank that you know, you use, and you understand, especially if you're in Nashville or the Tennessee greater area, these two personally, I do think will be going higher over time. And you do have the opportunity to trade these in and out because again, math is just math. If you buy 1,000 shares of anything and it goes up $3 and you know your risk is $1, you're going to make $3,000 to risk $1,000. That's second grade math, ladies and gentlemen. That's what I teach. That's my specialty. Make sure to hit the subscribe button if you do not subscribe already. I would love to continue to provide insight, enrichment, and help for each and every single one of you on this YouTube channel. Thanks so much for being in my life, ladies and gentlemen. You rock. And until next time, love life, live life, and trade it. Bye.